Welcome to Trading Lounge and the gold and silver report. We'll also have a look at the dollar index, the DXY. On the weekly chart here, the wave 4 38.2% retracement level is down a little bit lower in this instance. Because the market's been working in sets of threes in terms of corrections, then it's possible that we could have one more small low and be completed in this case. So in very simple terms, if we look at the 1800 here, if that becomes the tested support, then we can look to trade long at that point. So let's just drill in and have a little look. So if it was the weekly chart, so this is the daily chart here. So we've been looking at it as well. We can look at it in different ways. Put an A wave here. We could also put an A wave here as well. We could also have this as a WXY coming in here and finishing just in here as such, as an A wave to here, an A, B and C wave to here for the B wave, and then down for the C wave here. So visually it looks like it could be completed here. We're thinking that there could be just one more little move here before that's completed as an ABC here for a WXY pattern coming into here. So let's just drill in a little bit further and look at both of these patterns. So yeah, so from this XY here, an A wave here, an A, B and C here for the B wave, and then down through here for 5 waves down to this point. I know that it's possible to count 5 waves into this point here, but it's also possible to count 3 waves to this point as well, and having a wave 4 here and then a wave 5. Now the interesting thing here though, if this is a wave 4 here, then just below the 1800 is the 38.2% retracement level, so we can get something like this coming into play here and then finishing off. But either way, what we'd be looking for here in terms of any long trade is that we would need to see support on the 1800. So we in a nutshell, we want that first high above the level there. And then of course we can get a better entry than that, but we want to see that first to tell us that's the case. So let's go in a little bit further here onto the hourly chart. This is how I've counted it down here as 1 and 2 here, and then 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave. So the 38.2% retracement level from wave 2 to wave 3 here roughly, that brings us into really where it is here at the moment at that point. If we do push up from that point, currently we've got 3 waves up. If we do push up here for another high, let's just assume we do for a moment, then that would give us 5 waves up, and then to the 18 there would be a sell-off at the 18, and then we'd see a move back in this case. So if we get 5 waves up, that means we could possibly have a low in place here, but we still want to see that first high above the level there, and possibly a second high for the entry there, because now we're talking about support on top of the 38.2%. Well, the 38.2% is a bit lower down here somewhere. So getting support, having this top here play out, or the second one here, then any move above that would be telling us that the 18 is the support now, and we'll be moving above the 38.2%. So that means that we can also go long from that point. So yeah, just taking into consideration a couple of counts. But if not, well then we'll see one more move to the downside here coming into the, I don't know, 1750, 1730 something. I mean, wave 1 up here was really small, so I wouldn't expect too much out of it, you know, at that point. And then we've got to go again at that stage. It's kind of interesting if we have a look at the dollar index as well. It's been doing all the right things in terms of the way that we've looked at the count. So we looked at the count moving to the upside here as wave A, then an A and a B and a C and a D and an E. So I've just called that a triangle for wave B, and then 1 and 2 and 3 and 4 and 5 for the C wave of wave 4. So that all played out nicely, and then we were waiting for to see if we get an impulse wave to the downside. So I might just go into a smaller degree here. I think I might just go to the hourly or 15 minutes. Yeah, so our C wave for wave 4 here, and we looked at wave 1. We knew we had an impulse wave here, so you can go short at that point. And wave 3 here, wave 4, and wave 5. So there were nice moves to the downside. Then we've had our corrective rally here back to supply levels here, 50-60%. And now we're also looking at 1, 2, 3, 4, 5 here on the smaller count. So we'd be looking at down for 1, back for 2 here, down for 3, 4, and 5 coming down here, 4 wave 3 here, and then wave 4, and then wave 5 coming down here to finish this off here somewhere. So this could actually be, so I still need to do a fair bit of work, but this could actually be the low of the low here for this. And then we could start to see it bullish. So it will be interesting to see, like, while this is moving down through here, we're likely to see the gold rally at that point, also depending on interest rates as well. Yeah, there's the DXY, and it's just been unfolding since we've been tracking it quite nicely. Sorry I haven't put it in the last 2 videos. I just simply forgot. Always so much on my mind. But yeah, so yeah, I think last time we spoke we're in here somewhere, but anyway, it's all filled out quite nicely in that regard. But it's still sitting on support at the medium level here. But yeah, it does appear that we will be taking this low out here because this is corrective at that point. So yeah, that can help gold push to the upside. So that's one thing there. So if gold is got a low in here, but I mean, how far, I mean, I know there's fundamentals, stories for gold, for the US dollar being really, really weak. But I need to stay with the structure, so what we'll do is we'll count these 5 waves down here, and my count so far is to have a low in place here. But anything past this 5 waves here, 1, 2, 3, 4, 5, anything past that means a corrective rally back up and then down again, then we'll know that it's more bearish at that point. But until I get that evidence, I can't move on it. But the story is that, the dollar is sort of in a collapsible mode, but I don't know. I'll just count my waves. So yeah, let's just count these waves and see what happens as it finishes here and moves up. I mean, that could put pressure on gold again at that point. Let's just have a look. I haven't done anything with the rates yet, but they're up even stronger here. This is the 1 hour chart. So this is the Kobe interest rates, 10-year rates here for that. So yeah, they're just continuing to move up through here and they're expanding, and see that they're gathering more traction here, because fund managers will basically look at, they'll look at this and they'll start, allocating funds, safe money to these markets rather than speculative markets. They need to manage their risk. So yeah, so just to recap with gold here, coming back to the gold chart, and I should put gold on here as well. So yeah, this is the 1 hour chart, and I can just see one more move coming into play here. But just in case I'm wrong, then support on top of the 18 would take us up at that point. Today with silver, I'm going to have a look at just the positive count. So let me find silver. We haven't had a look at that for a while. And the positive count here is wave 3 over here with an A and a B wave here and a C wave down here for wave 4. I know it looks a little bit odd, but 1 and 2 here and 3 here, and then 4 over here with a triangle pattern of an A, B, C, D, and E here for wave 4, and then 5 waves down for wave 5, C of 4, and then looking at this as wave 1 and 2 here, and 3, 4, 5 for 1 and 2 here, and then up for 1 and back for 2. I think it was, so as long as that, my thing has always been, as long as that stays in play there, then that would be okay. At that, it would remain positive. So we can look at this as wave 1 here with an A and a B and a C wave here for this. Just want to have a look at some of the other markets here for a second in silver. So these two here, SLV and just check, I just wanted to check on a few things. See, this is just an hourly chart, but it's got, so this is Sprots, or what do they call it, physical silver trust. So in this case here, it's the same thing. The top of the third wave here, the A wave here, the B wave here, then 1 and 2 and 3 here, and here it's much clearer, isn't it? All of this is wave 4 for triangle down for wave 5, and then we can see 1 and 2 and 3 and 4 and 5 here, and then the pullback here. Oh, that's interesting. So that makes that the low there rather than that one. Okay, I'll adjust that on the other one, and then going up for 1 and back for 2 here. So I mean, sure, it could still be a big B wave, but it's certainly taken out the top there for that. And sometimes you got to kind of ignore that kind of stuff, it's just it's just a blip on the radar of life itself, I guess, because it's certainly pulled back into its, trend channel, so to speak. But still, even if we didn't look at all of that, we could still go up here as 1 and back for 2 here, or up for 1 and an A and a B and a C back here. But anyway, just showing here that this looks like a nice impulse wave at this point here, and that's the same with SLV here as well. In this case here as 1 and 2 and 3 and 4. It doesn't show up in gold that well, but you could do gold the same as well, because gold actually hasn't taken that low out here. So with gold, you could also do the same in a sense. Anyway, I just wanted to have a look at those two things there, so I'll leave that to that. So yeah, counting this up here as 1 and 2 and 3 and 4 and 5 is okay. This wave 2 may need to come over to this point, but yeah, so I think we talked about being long, didn't we, somewhere in here? I know we were short as well, so we've been, I'll just fix this up. So we looked at being short of this one or this one, but obviously we've been stopped out. That was a bit of a high risk sort of thing to do, but it looked okay at the time. So now we need to really be on the long side here for this. We need to keep the stop out of the way here as well. We can, this 2800 here, we can look to add on top of that. We also need to just be mindful of where resistance is. So resistance is all the way across the top here for this. I mean, if it's going to be positive, that's how it would play out. And this would be wave 1 here with an A wave, a B wave, and then 1 and 2 in here, 3 here, and 4 here, as we talked about before, and down, spike down for 5 here. So that's how, if that count is correct, that's how that would play out there. And you need to leave the stop out of the way from this. So the 50-60% retracement level here, need to keep the stop under that. Otherwise, you're just asking for trouble until it's built support at this point. And it's probably not even wave 1 here. It's probably 1 and 2 here, and 3 here, and 4 here, and 5 here. So this really could be still an ABC pattern to the upside. So we'll put that over there. So we can buy new highs at that point. Yeah, because I think I don't have to pull that apart a bit further. If somebody can do that, that would be great, because this could be viewed as 5 waves down here, as 1 and 2 and 3 here, A, B, C for 4 and down for 5, and then back as an A and a B and a C here for this. So yeah, down for 1 here, an A, B, C here for this, and then down for 1 and back for 2 here. So just watch that. Be careful about that. Don't get too excited just yet. This is the 50-60% retracement level, but getting support on top of the 2.8 would be the safer bet with all of that. So we're not out of the woods yet on the long side. It's still, it's still high risk on the long side here. Anyway, keep an eye on the US dollar, see how that affects this market as well. Alrighty, that's it. Thanks for tuning in. Cheers.